Good morning, everybody. What a day yesterday, huh? What an absolute day we had with Jerome Powell sending the market in the upward direction. Came out way more dovish than I believe everybody was anticipating. It was of the belief, and I think it was kind of understood that Powell didn't want the market to really, take off in the upward direction like that. That's indicative of loosening financial conditions, right? So it's definitely an interesting conundrum that we're in. The fact that he was so dovish does strike me as, again, just quite simply put, interesting. We can't really do anything about it as individuals one way or another. We're just going to take what the market gives us and we're going to move on from there. So he did do exactly what we expected him to do with the rate hike in terms of a percentage increase, right? 25 basis points rate hike. That's exactly what the tool had been pricing in. So his track record is pretty good for following the tool. And I would expect that going forward, we get whatever the tool continues to show us. Now, the ECB hiked 50 basis points. I don't know if it was this morning or yesterday afternoon, but they hiked 50 basis points and pledged to do another rate hike in the following meeting. I don't know what that means for us. So far, the market's kind of unchanged on that news. The news that we had to contend with came out quite literally, almost 5 minutes ago now. At 8:30, we got our unemployment claims, which were at 183,000 versus 196 expected, and down from the previous as well, which was 186. So, unemployment's still going down, which is, something that Jerome Powell noted in his press conference yesterday, that the labor market remains incredibly tight. It's not an issue at all. He was not concerned whatsoever with the JOLTS numbers here at 10 a.m. yesterday. So, we're not seeing those mass layoffs really take hold across, the country, to be quite frank, right? The layoffs sound intense in tech, and we've talked about this in the past, how although, yeah, sure, Amazon's going to lay off like 10,000 people, 11,000 people, whatever it is, it's not much when they employ 1 million, right? And I get it. There's a lot of those people who are wrapped up in fulfillment who don't make nearly as much as those who are on the engineering side and the tech side of Amazon. I totally get it. It's not, not all jobs are created equal. I get it. But, just in terms of what it means for the economy, the data is just not showing us any signs of, hey, unemployment spike, recession around the corner. Jerome Powell's now dovish, it seems. Rate hikes may be pausing sooner than we expected. The bearish narrative is quickly falling apart if you are looking at it from a fundamental lens. Anyways, into the remainder of the week, tomorrow morning at 8:30, we will be getting the hourly earnings as well as the NFP. We'll probably be live at 8:15 to catch the NFP event. Unemployment's cool, but NFP is really what we focus on there. Unemployment rate also is coming out. So we got claims as always on Thursday, and rate here is always different, right? Rate is always different. That's the monthly rate. 10 a.m. will be ISM Services PMI, something to keep an eye on, but 8:15 tomorrow morning we'll be live to catch the NFP, and we'll go from here. So what do we see on the stock-specific headlines perspective? Obviously, the big deal is Meta, and I will fully admit that I gaffed that in last night's video. Too many things going on, just completely blanked, forgot that they had reported, didn't even look at the chart, but Meta's obviously up significantly. Huge surge as they beat on quarterly revenue, and there was some commentary in there. You can see that here about the year of efficiency, and basically how they're transitioning to have more direction as we head into the new year, right? So Meta did really well. We'll look at that chart in just a moment. I think the chart speaks for itself, and at least with the gap up, it's going to be fairly difficult to trade this morning. We'll talk about why as we get to that chart in just a moment. All right. Next up, what else do we see? ChatGPT introduced AI to the masses, and it's already affecting us. We know that to be true. What else do we see here? Ferrari profits jumped 13% in 2022. The supercar maker expects an even better year in 2023. That's kind of interesting. And cool concept car there in the photo as well. I actually like that one. It's not overly futuristic like all EVs tend to be. So I like that. What else do we see? Charlie Munger says the U.S. should follow in China's footsteps and ban cryptocurrencies. I don't think we should go that far. I think that cryptocurrencies can exist. Maybe there's some regulation around them, but an outright ban, that kind of goes against. I would think to some degree it's kind of stands against what America was founded on, freedoms of different things. So Whether or not that should apply to currencies, maybe it's a little bit murky, a little bit of a gray area, but we'll see. Anyways, it's neither here nor there for this morning's trading session. Citi upgrades FedEx to a buy as the shipping giant focuses on controlling costs. If you remember, FedEx was the first one to sort of forecast, hey, we're going to be in store for some tough economic times. Now they're getting an upgrade from Citi. So if FedEx pulls out, well, it doesn't, how should I word that? If FedEx improves from here, it would be definitely a good leading indicator for what's going on out there in the economy, right? People are sending things back and forth to each other. FedEx has definitely a good grasp on what's going on there. What else do we see? Stock-specific stuff. Adani continuing to just hemorrhage money. We've got $100 billion gone after the Hindenburg Research Report. That's probably the quickest evaporation of wealth in the history of mankind. But we'll see how that continues to unfold. I'm really excited to see if they put together a lawsuit and try to do something on the counter to the report. What else do we see? Stock-specific stuff. Twitter will start charging developers for API access as Elon Musk seeks to improve monetization. I don't know what goes on with the... There's probably tons of apps that are built on the Twitter API, but I just can't think of any off the top of my head anyways. What else do we see? Stock-specific stuff. Oil giant Shell posts the highest ever annual profit of nearly $40 billion. We know that energy has obviously done really, really well in Q4 of last year, so no problems there. That's to be expected. Biggest movers pre-market, all earnings candidates right here. Bank of England hikes rates by 50 basis points. We just talked about that moments ago. Now sees a much shallower recession than feared. That's obviously bullish. What else do we see here? Stock-specific stuff. Meta's Q4 beat continuing to be a discussion point. The U.S. Fed's smaller rate hike brings the dollar strength closer to its end. Yep, we saw the dollar come in. We talked about that last night. Upgrade to Meta from Bank of America. Says new efficiency mentality positions stock for more than 40% upside. So that's kind of crazy. I mean, 40% on top of the already, what is it, 60-ish% that now it's up way more than 60%, but the stock has just been an outperformer since it bottomed in the last earnings cycle. The fact that there's another 40% upside, crazy. What else do we see? That's really it. That's it for stock-specific stuff. So let's take a look at our earnings calendar. Again, there was the miss. I completely forgot to include that in last night's video, but Meta was after the close yesterday. A couple of other things that are interesting, some insurance stocks, Allstate, Aflac, MetLife, those guys. Before the open this morning, Merrick, Eli Lilly, BMY, Bristol-Myers Squibb, Honeywell, and that's kind of it for the healthcare sector. And then after the close, we know it's the Three Musketeers, Amazon, Apple, Alphabet. Qualcomm might be worth keeping an eye on, as well as Starbucks, and I would say United States Steel from a industrial/materials perspective. If you are focused on the healthcare sector, I think that this pre-market Merrick, Eli Lilly, BMY gave you a pretty good idea of what's coming, but Gilead after the close. And then Friday is kind of wouldn't really, not focusing on Friday too much. With all of that said, let's move on over to what we do best, which of course is the analysis of our ES futures on the 4-hour time frame chart. We will dive right into the analysis here once we see who is in the chat with us this morning. Who's kicking us off strong? Let's go all the way up to the top and see who it is. Nick Farrell, thank you so much for being the first up in the chat, saying good morning to us all. Appreciate you being here. After that, we've got Almost Davy Day Trader, INF, Kevin Leary, Ketchup Kings. We've got Risotto, Mickey, Chris C. Look for the setup, Tony Ray. Ketchup Kings is in the building. Oops, a retracted message and then a good morning. So good morning to you. Starlight, Miami Beach Broker, Roger Tutt, Ike Wells, Sharath, Harry St. Louis. We've got MV, Jabba, Deb, Sleuth Trader, George, Killer Herb. We've got Headwing, Gregory Rulo's in the building. We've got Buckminster Wallace, Kailash K. We're going to say Icy Pro Jake, Christina Ann, VAV, Ronald, excuse me, not Ronaldo. Leaf Floating on a Lake, Cipriano, Chloe, Ryan Speed, Cy, Headwing. Who else? Stevie J, Willow Puff, K, Tony, Thomas. We've got A. Ramus, Mudaman, the original Rude Boy, Mona Makes Mora, Ike Wells. We've got Blythe. Who else? M. Leonard, Inza, Thule, J. Hicks. We're going to look for, what else? Going to look for some green names here. Infornity, Siege is in the building, M. Spears, Kevin Weston, Rebecca F. J. with the gold cash bag. And I spent it wisely. That's a new one. New username, and I believe a new supporter of the channel, but I do appreciate you being here. Thanks for tuning in. Thanks for supporting the channel. Always appreciated. Who else? Green names. Kid Ray. We've got Bluefish Aquariums. We've got Scott C. And I think that's going to do it. So thanks to everybody for tuning in. If I missed you on the shoutouts, get here sooner, say something sooner, and I'll probably catch you earlier, or just get yourself a green name. Anyways, ES 4-hour time frame chart. I mean, very, very bullish, especially after the big rally from yesterday's session. Note that we have lows, higher lows, higher lows, higher lows, higher lows, and now we have ourselves a higher high. So when it comes to trend count, remember, it's always important to note where your lows are, but even more important, or just as important, we should say, is also tracking where your highs are. And along the way, we've been consistently producing higher highs. Now that we're sitting on a higher high, we could easily afford some sort of higher low pullback. So the 4-hour chart, whether it goes up or down today, has the opportunity to remain in an uptrend and remain bullish. So I would make note of that. Even if we pull back, the market is not bearish here. We're just finding the next higher low. Where would the ideal 4-hour higher low be? Well, let's go ahead and scrunch this chart up just a little bit. I'm also going to expand this and make sure that we can maximize our screen area here. There we go. So ES, 4-hour time frame, probably wants to just find a higher low anywhere above the top of the original balance here, right? Boom. Something that does this, that stays above, what is this, roughly 40.80. Anything that stays over 40.80, 40.85, this general area, these prior highs, we get ourselves a break, retest, rally, right? That, of course, would be bullish for our 4-hour time frame chart. So even if we flip into like an hourly downtrend or a 15-minute downtrend, it's not the end of the world on the 4-hour higher time frame as long as we're above 40.85, 40.80, that general area, the prior top of the balance here. I mean, in a picture-perfect world, yes, we do continue to respect the top, the double top, that is, here and here, and we stay above that, but it's asking a bit much. All right, so let's go to the hourly chart, see what's going on with our hourly. If we isolate the price action, once again, hard to say anything bearish about the screen in front of us. We've got lows, higher lows, higher lows, higher lows, and along the way we've got highs, higher highs, higher highs, and higher highs now. So once again, even the hourly chart can flip into a little bit of a downtrend. It's not the end of the world. And we would find ourselves, or well, it would be a smaller time frame than the hourly. It would be a 15 or a 5. And so far, I'm seeing no excuse for any kind of big major change in trend on the higher time frame charts. Hourly can produce a higher low. 4-hour can produce a higher low. We know that 40.80 so far seems to be the most clear higher low pullback area that we want to see respected. That would be our break and retest of this resistance area. Resistance, 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 break, retest, higher, right? So 40.80 seems to be the number, 40.80, 40.80, 40.80. We've said it enough times. Let's move on down to the 15-minute time frame chart. See what's going on here from a price action perspective. Obviously, for those who live under a rock, I suppose, the FOMC is what caused this big rally yesterday, and we're holding on to those, those gains, so to speak, in the pre-market. As we just saw at 8:30, we got the unemployment numbers, and things are fine, right? No big spike in unemployment claims. It continues to be historically low. No concerns of that earnings recession, or as much of a concern about that earnings recession. All of these things are kind of slowly fading away into the background, and the story is becoming, okay, what's the bullish catalyst that pushes the markets forward? It's going to be the Fed pivot or pause in 2023 at some point, right? Let's go ahead and adjust our overnight high to where it rightfully belongs, just slightly above the prior high of day. And what can we say about the chart here? Well, we'll stick to our process. Question number 1, where are we opening in relationship to the prior day's range? Here's the high, here's the low. I mean, believe it or not, we're actually opening on a very minor gap up here. I would just say we're opening on the prior high of day. There we go. There's a little bit of volatility, a little bit of a push in the upward direction. Now it's definitely a true gap up. But for all intents and purposes, we're not all that far removed from the prior high of day. I would not consider this a major shock and awe type gap. If by the time the 9:30 bell comes around and we're opening around 41.80, of course that's a different story. But as of right now, just opening close enough to the prior high of day where in the context of this overall move, certainly wouldn't treat it like a major gap up. Not going to be any shock and awe on the open because of that. Nobody's waking up and saying, oh, we're so far removed from the rally yesterday that, I've got to do something with my position, right? I suppose if you went out short because there was this very minor pullback into the close, you're not feeling great about that right now. But anyone who is trying to short this big rip in the upward direction, just not wise. Not wise, not wise, not wise. You never fight the direction of a Fed move. Even if you think it's going to give us that double dip fake out, right? Usually there's one move some direction, and then it goes the complete opposite direction. It's just, we talked about this yesterday. Hopefully it's a takeaway for folks as they continue to develop through their trading career. It's all about minimizing risk. If you can not expose yourself to risk during extremely volatile periods like this, sure, you're not going to make $1 million as the market rips in the upward direction, but you're also not going to lose your shirt if you decided that you wanted to go in the opposite direction and be a contrarian, which is typically what happens when, economic news comes out. It's like, oh, Jay Powell's full of it. Let's fade him. The market's going to realize that he's wrong, and maybe he'll slip up and say something bearish. Market's going to go to zero, right? It's not worth it. So anyways, all of that is to say, let's boil it back down to question number 1, right? If we just clean up all of that scribble, all of that nonsense here, it's very unlikely that we see any shock and awe on this morning's open because we're not all that far removed from the prior day's high. Now we're actually getting a little bit more of a gap higher. So we'll continue to keep an eye on that. But so far, not seeing reason to believe that we should be fading this, right? If you think about the gap rules, right, this tiny little gap that's being produced, certainly not really attractive looking in the context of this overall move for a small fade. Like, how many points are we looking at here? 68 to the prior high of day is 63. So a 5-point fade. I mean, it's definitely worth it. Don't get me wrong. 5 points is plenty of points in the ES, but given the amount of volatility here, you would have to put a stop over the overnight high. Just not in love with the setup for a fade just yet. If the gap goes higher, if we get a bigger gap, we'll reassess. But right now, let's stick to the script. Question number 1, not thrilled with the size of the gap. Maybe there's some inventory correction. We'll be mindful of that. So we'll leave it off at that. I think we've hammered home that point enough. Question number 2, overnight range. Where are we opening in relationship to that? Well, obviously, I've got to keep adjusting the overnight high to its rightful position. Somewhere up here, we're opening on the overnight highs as of right now. So definitely a little bit more bullish than bearish. By no stretch of the imagination, does that mean that we are just blindly longing this open? Again, could the market be slightly extended here? Yeah, the SPY weekly expected move is telling us no, market's comfortable, but we are coming into a known area of resistance, this gray bar. So I'll show you that on the hourly chart in just a moment, where that gray bar resistance is coming from. I don't know that it would be wise to chase this move without experiencing some sort of pullback and then a rally. If it does just go, you of course want to get in on a higher low pullback that can define your risk above VWAP. We'll talk about situations in just a moment, but for question number 2, opening more bullish than bearish on the overnight high. Question number 3, last but certainly not least, what is the position of the overnight inventory? Is it net long or net short? To do that, you just extrapolate the settling price. Same thing as saying the prior day's close. How much time was spent above, how much time was spent below? You can see clear as day, way more time spent above. So overnight inventory is nearly 100% net long. Whenever this happens and whenever we're dealing with a very slight gap up, so let's actually indicate that, yes, we have a slight gap up here. It's possible that we get inventory correction, aka some sort of pullback. Once again, I would not be trading for this gap to close. 5 points there. It could happen in the blink of an eye. I don't think it's worth trying to position for 5 points in the context of this overall volatile move here. So could we correct the inventory? Yes. Is it tradable? Not so much, just based on the nature of the move and how this is all unfolded. So all of that's to say, if we just summarize the 3 questions, there is the potential for early morning trade because we are getting some sort of open outside the prior day's range. There's a decent opportunity that the inventory correction could result in a pullback to close the gap, but it doesn't look that we want to try to take advantage of that gap close, right? It's just the structure is not right for it. So let's adjust the overnight high to where it rightfully belongs, and I'll show you where that resistance is coming from. That's the gray bar that I'm discussing right here, right, on the hourly chart, and then we'll talk about some situations. So let's go to the hourly quickly. Hourly chart, looks like we're actually going to have to grab more than 90 days. Can you imagine that? We have to look left more than 90 days. So hourly chart, still not going to show it. Let's go with a 4-hour maybe, or 2-hour. Let's go 4-hour. So this gray bar that we're running into is not only the wick high from here, the double top, right, this and this, but if we look left to here, it was prior support, then turn to resistance. You'll remember this area as a break, retest, and then that's what really caused the flush into the lows of October, right? So this head and shoulders neckline from back here and the break and retest of it, boom, 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 is what we're running into as resistance currently in the overnight session. If we can breach that area, let's just look at this on the 4-hour chart, right? I want to point out what we have overhead after that. 4,300 becomes a target. That's a gap, right? That's a gap. We'll talk about that on the hourly, I suppose, maybe in just a second. But look at the breakdown on the 4-hour chart here. Very, very thin structure to travel through. So there's not a whole lot stopping us if we can clear this 4175-ish hurdle. If we can clear the 4175 hurdle here, 4,300 could be around the corner sooner rather than later. Once again, I don't want to, advocate chasing big new money longs. The market's just going to continue to go up and up and up and up and up and float away like a balloon forever. That is not how markets work. They tend to have some give and take. But I'm just pointing out from a structural perspective, there's not a whole lot here that's going to offer up resistance in the interim, right? Let's go to the hourly chart. And I think what I'll have to do on the hourly chart is just go ahead and turn off the extended hours data. That way we can see all of it kind of on one screen. Yeah, there we go. So you can see, right, if we look at this, this is the support that then turned to resistance here. And then this is the gap. This is the gap, right? So that's 4,300. And you can see once again, very little structure as we broke down from that area. Let's zoom in on that. Very little structure here as we were breaking down and selling off aggressively on whatever that was. When was this? This was this was August. End of August. Big breakdown, right? So that's what I've got for you on the ES. Let's go back to the 15-minute time frame chart. Now that we understand where the levels, where the zones are coming from, let's have some discussion about what could unfold here on the open. The gap is becoming a little bit more significant. So maybe there's going to be, if the open is just right, if there's a very sharp failure of the overnight high and then we fade the gap, maybe it's an opportunity to take advantage of. The stop has to be very tight though in this type of situation, because if we do get a continued squeeze, if the shorts from this market are going to throw in the towel today, then again, there's upside to be had here. So let me get rid of that silly high-low bubble. It's something that I always say I'm going to set as a preset, but I never end up doing it. And there we go. So we've got some drawing space. We can think clearly about this chart. If you're bullish, of course, as we pointed out, even if we pull back, it's not the end of the world. Ideal higher low is off of the overnight low, and we do something like this. Respect the pullback from the afternoon session yesterday. So you're looking for hammer candles down here. You're looking for intraday double bottoms, intraday inverted head and shoulders, right? That's the overnight low. That's 4136.75. 4136.75. That's the number to hold on the rainbows and butterflies pullback. If we just get blatant continuation, if this gap does not close and we just go higher, then what you're looking for is the first higher low pullback above some sort of VWAP, or a bull flag that forms here on the 5-minute chart, 15-minute chart, and then we go. You need some sort of way to define your risk without just blindly smacking it long. If you smack it long here, where do you place your stop? Is it under the overnight high? Is it underneath the prior high of day? Is it down here underneath the overnight low to expect that pullback? Really depends on your time frame, but as a scalper, an intraday trader, which I assume some of you are, at least some of you, maybe not all of you, but most of you are, some sort of pattern needs to unfold here that defines our risk. Okay, so that's if we just get a gap and go this morning. I do think it could be powerful. Once again, shorts getting absolutely squeezed out of the market. There's kind of no short narrative left. I mean, Meta, massive gap up. Powell turning a little bit more dovish. The structure turning more bullish with a healthy break and retest underneath us. A weekly uptrend has begun now with this higher high. I mean, everything about the market is starting to position more bullish than bearish. Now, let's not be blindsided by that fact. Let's be open to the possibility that we could, in fact, get a little bit deeper of a pullback than we expect. And remember, if that does happen, it's not the end of the world. If the ES comes down and tags 4080, that's that number that we were just harping on the hourly and 4-hour time frame charts. Okay, to get to 4080, I would think about the single prints here inside of our structure. Single prints inside of the structure. Let's go on over to the market profile to talk about the single prints. So let's go on over to the ES. And there's the single prints. All right, so here's the market profile. And what I mean by single prints is this area right here. Right, we're talking about underneath 4115, closes down towards 4090. Notice that that's above the 4080 point of control and pullback area that we just discussed. Okay, so anyways, to get to 4080, what you would want to see is a breakdown of 4115. 4115, 4115, 4115. Let's go ahead and put that on the ES chart on Thinkorswim with just a orange level. We've got it mapped out on the SPY, but let's do it on the ES as well. 4115 roughly, somewhere right around in here. Good enough. And we'll make that orange. Good to go. Dashed. Perfect. That's the gatekeeper, so to speak, for the deeper pullback because it represents single prints underneath. Then we can look for 40.80. All right. That's the game plan for the ES. Once again, to summarize for anyone just tuning in, to recap for myself, just to give myself some clarity here, let's talk about upside first. If we get a gap and go, we're looking for some sort of pullback over a VWAP on the day or some sort of bull flag to unfold on a 5-minute chart, 15-minute chart. If we do see the gap rules pan out and we go like this, great, that is bullish as well. You can look to long through the opening print or over the high of day. If we see a little bit more of a pullback, it's still not the end of the world. This is a rainbows and butterflies pullback. We are looking for something to form hammer candle, double bottom, inverted head and shoulders, whatever, at the overnight low. And then anything underneath that, okay, let's flip the script. Let's think, all right, it's not bearish on the higher time frames, but a breakdown of 41.15 could rotate us down to 40.80, which is a line in the sand break and retest, higher low pullback. This is an area of interest at 40.80. All right. So that's my roadmap for the ES today. Those are the situations that I would be paying attention to and the numbers where we are looking for some sort of reaction. With that said, let's take our infamous YouTube poll. What does the chat seem to think is going to unfold for today's session? If you are a market bull, let's just say that market bulls are looking for something like this today. Maybe we repair the structure, get the gap fill reversal. Anyways, breaking the overnight high, continuing the squeeze in the upward direction. Let's see a number 1 in the chat. If you're a little bit more neutral, thinking that we go gap fill reversal, but it fails, and then we go back down to the overnight low, maybe deeper, something like this. A key component of a number 2 response on today's session is that we do not violate the single prints underneath us. We do not violate the single prints underneath us. 1, of course, is bullish with the new higher high. 2 is not violating the single prints. Bears want to see the market go to hell in a handbasket. Boom, lower high, break the single prints, and through, key component here is right through 40.80 for a downside rotation. That would be a number 3 in the chat. Number 3 in the chat for all of our bears. All right. If you have no idea what's going to unfold on this morning session, that is A-OK. Let's see number 4. That will suffice. That's our ostrich option. I'll let that simmer for just a moment, and I'll type in the official clickable YouTube poll. All right. So what do you think? Question mark. Number 1 is bullish. Number 2, newt. 3, bearish. And we'll go 4, ostrich. All right. Clickable YouTube poll is out there in the world for all of our lurkers who do not like to participate via chat. Now would be a good time for me to remind you that a quick thumbs up on the video goes a long way to support the channel. 805 people in the chat with about 100 likes. That ratio seems far off to me. Anyways, scrolling back up a little ways higher, we've got Ross Meir. Good morning to you, sir. C. Welter. Nice to see you. Small Ben. Who else? Joe. That's Joe Donzi, by the way. Abel. Willow Puff. In my discussion, we don't discuss VPOC. You know, you can only hit so many things. There are no virgin points of control as of right now. I mean, you really think about virgin point of control if in the next day you don't tag up to the prior point of control, which would be here, right? So there's no issue with them stacking up underneath us. That is for a shock, all right? So with that, I think we've got everything in store here. Yes, Abel, liquidation break could be in store. Absolutely. Liquidation, well, maybe not on Friday per se, but liquidation break on the intraday sessions can be a top priority considering we're sitting on higher highs. If longs who are late to the party, this will be the final thing I say before we get into the poll results. If longs late to the party up here don't get paid on a break and continuation of the overnight high, then yes, those with poor trade location will start to close out. And if we get sort of a waterfall effect of that taking place, or maybe a bunch of stop losses get triggered, right, on any sort of move back down underneath the prior high of day, yeah, liquidation break can occur. You'll see a bearish break out of nowhere. You'll know it's a liquidation break if we get a 100% retracement and the internals act as if nothing happened. Okay? So yes, good point. Whenever you're making higher highs, whenever the longs are getting paid less and less and less, your mind should go to liquidation break. All right, so good point. Good call out. With that said, what do we see for chat responses? We've definitely got ones coming in early, as we typically do. And that's, of course, due to the fact that we covered the situation number 1 first. But as I get deeper through the list, not very many 2s, some 3s, but definitely the chat is skewed more bullish than bearish. There's no doubt about that. in both the typed in responses. I mean, I'm just seeing tons of ones in the chat today, some twos, a lot of fours as well. Some folks not really sure what to make of the rally from yesterday, which is totally understandable. I mean, it ran contrary to the bearish narrative that I think many folks were telling themselves. And, I kind of had that in mind as well, that Powell would come out and be a little bit more hawkish than maybe he should have been. And it was just a complete 180, right? So he didn't really have his Volcker moment, so to speak. So lots of ones, lots of bulls in our chat today. 56% response rate for a number one on the clickable poll for bulls, which is far exceeding the 25% requirement for a majority there, obviously. So very bullish. Does that mean we get a pullback? I don't know. If you're a contrarian, you would probably fade the chat. But anyways, I think the roadmap that we've outlined is just fine, right? And the idea that even if we do see a 15-minute downtrend, it's not the end of the world from a 4-hour trend perspective or even an hourly trend perspective. I mean, these things can easily put in higher lows anywhere over 40.80. So knowing that, let's go ahead and continue through today's analysis. What else? No other questions, comments, concerns I'm seeing? Yeah, we'll talk about Meta in just a moment here, Keaton. We'll talk, Troy, guys, don't worry. We're going to stick to the script. We're going to go through the core list of companies in just a moment, and Meta is on that list. You guys know this, all right? So we'll get to Meta. It's 9:05. Let's continue along through the broad market indexes in the futures. So NQ is up next. What do we see in the NQ? Let's move our overnight high. It's got to be adjusted to its rightful position, which is in a yellow box overhead. We'll see that yellow box on the 4-hour time frame chart now as a gap, right? So this was a major gap down in this sequence in, early September. And we're poking into that overhead gap, which is just, incredible to me. The fact that the market has rallied so significantly in this rally here without seeing major pullback, right? The market can see major pullback. The market could have done something like this, could have rallied to these recent highs and then just gone boom, and then gone sideways for, a couple of months here. The fact that the rally continues to be so aggressive in the upward direction is quite impressive. Now, obviously, on the 4-hour chart, what that would imply from a trend perspective is that there's easily an opportunity for a higher low pullback. Oops, I think or swim always gets me with that weird Zoom glitch, but it's totally my fault. I know it's an operator error. If you hold down the control key on your Mac keyboard, control on your Windows keyboard, and scroll on the mouse wheel, you'll zoom in. You'll zoom in and out, which I'm sure is totally painful on your eyes. So I'm going to stop with the example and just move with the mouse. Anyways, any higher low pullback on the 4-hour time frame chart is, healthy, considerable, anywhere over 12.1. Is it 12.150? 12.175. 12.175. Any higher low pullbacks over 12.175 on the 4-hour chart are completely healthy and bullish for the NQs. You'll notice it would be a break and retest of this zone. Prior resistance, break, retest, confirm as support, and then rally in the upward direction. It is a bit of aggressive of a pullback, especially noting the overnight range is gapping up so significantly here in the NQ, largely due to the Meta earnings beat, or revenue beat, I should say. So that's kind of what's going on here. So I think getting down to 12.175 is a bit aggressive. Let's take a look at the hourly, right? Let's just continue down through the time frames. Hourly chart is telling us what? Same idea, right? If we just isolate the price action to this, lows, higher lows, higher lows. I mean, very, very, very obvious, right? We're moving from quite literally, lower left corner, upper right corner. Hard to say anything other than this is a clear uptrend. All right. We are getting a significant gap in the upward direction, and we know that this gap overhead is also in play. So let's go to the 15-minute chart and talk about the nuance of the gap here in the NQ. This is definitely more tradable than our ES gap, right? There's more range to be thinking about here in the NQ. So if you are looking to apply the gap rules on anything this morning, I would probably do so in the NQ and not the ES. The range is better to be trading for here. You can see we've got, what's quick mental math tell us? More than 100, almost 200 points, almost just shy of 200 points of gap underneath us to be trading for in the NQs, which of course is far superior to the 5, maybe 10 points now that we're getting in the ES, right? The ES equivalent of a 200-point gap in the NQ is more along the lines of 20 to 30 points, and we obviously were not getting that in the ES. That's largely due to the impact of Meta and the concentration in the NASDAQ 100. Anyways, all of that's to say gap rules are in play. We're opening outside the prior day's range. We're opening on the overnight high. Overnight inventory is 100% net long. So Gap rules would tell us if we fail the overnight high, if we fail to accept in the overhead gap, which is this yellow bar overhead, we know that that gap closes significantly higher at 12,850 roughly, 12,850. Let's just round off there for the sake of numbers. If we don't get any acceptance continuation through the gap, lower through the overnight high, lower through the opening print triggers a short setup to fade the gap, close the gap to the prior high of day. 12,515 we'll call it for round number sake, 12,515. All right, if we don't get a full gap fill, if we get a partial gap fill, you always look for the 50% of the gap range itself. Let's take out our Fibonacci tool and just make sure we can see that clearly. So from here to here, 50% of the gap would be 12,500. Let's just round off there, 12,600. 12,600. If we make it to 12,600 and the market starts slowing down, so 12.6K, and the market starts slowing down there on the sell side, it would be a reasonable place for the gap to stop filling and then a reversal in the upward direction. So mind 12.6 and then mind the full gap close prior high of day. And once again, the framework to participate in this type of move is a failure of the overnight high that trades lower through the opening print, fade, and you are looking for lower. When and if we close the gap in its entirety, or you are looking for a gap fill reversal off the prior high of day, that's at 12,515, 12,515, then the target becomes the opening print always. Opening print after that. If we poke into the prior day's range, remember it's not the end of the world. We have single prints that are basically aligned with the value area high and close down here at that 12,175 area we just discussed on the higher time frames. So even if the market in the NQs get some significant pullback that basically retraces all of the prior day's range, it would still be healthy from a structural perspective if we find support in a higher low here around 12,175. 12,175. All right, so NQ is hard to say anything bearish about this chart as well. We know that if we do get continuation over the overnight high, if there is no failure of that level, we're in gap territory here, so very little resistance until we hit that number up top that we just pointed out. What do we say? 12,850. 12,850. So very, very bullish. Chart is very, very bullish. Only getting concerned with a fall apart if we violate value area high. If we break down here. Okay. Next up, Russell. What's going on with the small caps? RTY. Having a look at our 4-hour structure first, and we'll keep drilling down. Once again, very, very bullish. Lows, higher lows. Remember that in December, it never even came close to the October lows from here, unlike what we had in the ES and the NQ. It was the first to break out over the top of the balance here. We're getting continuation in the upward direction. We have ourselves a higher high. We can afford any sort of higher low pullback. We've got some new gray bars mapped out. You can see where they're coming from. Head and shoulders neckline over here. Break and retest area just like our ES that led to the sell-off. Next one is this area, the right shoulder of that pattern. And then the head up there, way up above at 2050. Not anticipating that this is in play, but it is useful to know where this one's coming from. Right around 2000. It's a little bit shy of that, 1990s roughly. I guess it is 2000. I thought it was a little bit lower, 1990, but maybe I'm wrong about that. Let's go hourly time frame chart. Obviously, the structure on the 4 hours bullish. Obviously, the structure here on the hourly also bullish. Higher high is being made. Our last higher low was way down here at the prior low of day. Pullback at this point wants to hold this area. That would be most ideal for the IWM. That's around 1950. We'll move on down to the 15-minute time frame chart. We've got 9:12 on the clock, so I'm going to speed it up a little bit here so we can hit all of the core list of companies, primarily Meta, in just a moment. What do we see in the rut on the 15? No gap up in the Russell. So remember, this acts or tends to act as a leading indicator for our market. The fact that Russell is not gapping up here, primarily because Meta is not included in the Russell 2000. There's a little bit of that, what would you call that? I'm blanking on the math term. There's a math term for that where something moves just because, something else. But there's some spillover, right, to the overall move that's taking place here, but it's certainly not producing a gap. So no gap rules will be in play. It's definitely more bullish than bearish, opening above the or off of the overnight lows, I should say, closer to the overnight highs, which again rightfully need to be adjusted higher. Let's do something like this. In this one, I would say that your primary watch is just for consolidation up here, holds us as bullish, maybe a break into the future. And again, that higher low wants to form somewhere above 1950 for a picture perfect look in our Russell futures. All right, it could technically close the single prints, which would be down around 1944. 1943.50. 1943.50 is the single print close down here. That would be a line in the sand. LIS. That's a really sloppy L. It's not a C. It's an LIS, line in the sand. 1943.50. All right. We've gone through the futures. Let's go back to the ES just to make sure nothing crazy has happened here. We did wick the overnight high, and we're coming down ever so slightly, but not all that far removed from these highs that have most recently been made. So once again, NQ/NQ is where you want to be if you're trying to trade the gap rules. Not so attractive here in the ES. All right. Let's go on over to our spiders. What's going on with the spiders? Same idea, upper edge of the weekly expected move, 415, just tagged it, just started pulling back in the pre-market session. So once again, market's kind of content as long as we're under 415 from an options hedging perspective. If we do get a gap and go, just start to be mindful that once again, liquidation break, as Abel sort of pulled up or thought about, is the absolutely correct line of thinking there. Longs are really in a precarious position there. If they're new money longs entering on these highs. The risk, of course, is for a pullback. Those longs close out, causing liquidation break, and we get a snappy move to the downside. Then it retraces 100%. So don't try to short that until the structure actually presents a bearish opportunity. All right. So SPY 415 would be an area to watch. It's the overnight high. It's the weekly expected move highs. The single prints start at 409.10 and they close at 406.50. Ideal pullback, rainbows and butterflies would be holding 410, obviously, on our SPY daily chart. You can see that's respecting the double top from here. All right, so we'll leave it off at that. Expanded thoughts were in last night's episode of the midweek market update. QQQ, poking into the overhead gap. We just saw that on the NQ futures. We're opening in that gap. So once again, there's a little bit of a discrepancy between the gap in the NQ futures versus the QQQ. You can see we've closed much more of it in the pre-market here in the QQQ cash index. We are through the upper edge of the weekly expected move. Pullback wants to find support at the gap fill reversal 303. Anything underneath is all about the single prints 299.20. Continuation in the upward direction. Once again, think about caution for new money longs. Next up, IWM Russell 2000 and the small caps. We just covered it on the Russell futures, so we'll keep it brief here. Through the upper edge of the weekly expected move. No gap up on the session here. You want to watch your overnight low as the gatekeeper to get into the single prints underneath. Technically, they start at 193.40, close at 192.10 in your IWM. The ideal, perfect, higher low pullback here supports on the top of the singles for something that looks like this, right? Boom, boom. That would be the most bullish for your IWM. Anything underneath, though, it's really fine if the IWM develops a daily pullback that respects 188.90. Once again, expanded thoughts on that in last night's episode. You can go ahead and check that out after today's stream. What else do we see? Apple, core list of companies. Big gap up here, obviously rallying with Meta and continuing to sort of, just move in the upward direction. Continuing this trend, I suppose. I'm blanking on words here. Continuing the trend that we're experiencing on the daily time frame chart, this is breaking out as a daily bull flag. Big failure from the sellers yesterday underneath that 143 level, and now we're getting that continuation over 146. I would not chase Apple on the gap up this morning. The gap is significant. I would apply gap rules. I would not be a new money long, just blindly smacking it long on the open. I think now is a time to be cautious about these charts that are gapping up, especially with earnings after the close. It just doesn't strike me that right now is the time to be all in long on Apple. I think if we got a break of the prior high of day on today's intraday session, sure, there's a reason to go long over 146, but gapping up, getting the quote-unquote professional gap up, the move before the market's open, not ideal to chase. So not thrilled about new money longs in Apple, probably looking for some sort of inventory correction and pullback. Then I would be interested in the gap fill reversal, which is here. Above 146, prior high of day is really 146.60. 146.60. If it does break underneath, it's not the end of the world if we do support off of 146. We know that's really the structural element from the daily time frame chart. That's Apple. 146 line in the sand. Probably not looking for just a jump on it long on the open. Netflix, a little bit of a gap up here as well. This is underneath the breakout point, 368.50. So I would watch for anything that really pulls back, finds a higher low above here. Any higher lows in Netflix over 362, boom, looking to go with that break over 368.50 for the daily move into 378. That's a 10-point range on Netflix. I know it doesn't seem like much. It looks very small here, but 10 points is 10 points, right? 10 points on an options contract, 10 deltas, definitely worth picking up. Next up, Tesla, gap up. I mean, everything in tech right now is gapping up on this sort of meta optimism here, on the fact that Jerome Powell was a little bit more dovish than we thought, the fact that the dollar is seeing some signs of weakness. Tesla gap rules are in play. Gap closes at the prior high of day. I would just use 182.40, 182.40, the daily breakout level here. It's just shy of the prior high of day, right? Prior high of day is 183.76. So, anything that pulls back, closes the gap, or even goes a little bit further here, definitely bullish, watching for those higher low patterns to form. Tesla could continue to squeeze, honestly, because of the overly short nature of what was going on here and the fact that this did not produce any significant sell on that red bar mixed in after the earnings report. All right. So any shorts who are just holding on to this thing thinking, my stop loss was kind of up here. We're holding on. If we get some continuation in the upward direction, we'll bail on this. All right. Shorts did not work out from that red bar. So I think those shorts will be the ones feeling pain on the open. And those are the ones that could drive short squeeze in the upward direction. So I'd be thinking about that. So, gap fill reversals, bullish, watching for the continuation of that squeeze. Breaking into the prior day's range, just be mindful of the thin structure all the way down to 176. 176 would be your deeper pullback in Tesla, 176. Next up, Google. Sorry, gave away the Meta sort of screen there for just a brief second. Google's reporting after the close, so caution here. Earnings always pump up implied volatility, so not really interested in trading the options on this. Obviously, massive move in the upward direction. Just, completely gapping up and over almost everything that we saw as resistance standing in our way. So hard to say anything bearish about this. I would not jump in long. Again, we are not, we're gapping through areas of resistance and we're not gapping over a red bar. There's no real reason to think about a squeeze in Google per se like we were in Tesla. The structure here was bullish coming into this move. We had a break of this overall range. So I don't think that you're going to catch too many shorts anymore off guard unless you have like longer time frame shorts, people who are shorting this on like a monthly time frame who out of this range, these prior highs, right, they're squeezing out over that, but I don't think it'll be as powerful as something like Tesla per se. So Google's probably a no touch for this morning. I would not smack it long. The gap is too large. On large gaps, and this is going to be, let's just actually go right to Meta, because this is basically exactly what I want to talk about today. Whenever we get a gap that's this large, it's oftentimes extremely difficult to trade. So I know everybody's excited about Meta. I know everybody's like, my goodness, we gapped up 30 points. This is the most bullish thing we've ever seen. We're watching for the market to continue here. Meta's got to rally. It's got to go to the moon, right? This is going to continue. Not necessarily. Whenever you get a gap that's this large, especially after a preceding downtrend like this, you're going to have folks who've been long from here, all of these people who just want their money back, who don't want to be involved with Meta anymore. They're like, I thought the company was doing all right, and now I'm finally at break even here near this 185, 180-ish area. I'm going to sell my shares. I'm just going to get out at break even. Maybe I'll reposition in the future. I get it. There's some strong optimism here. I just, I want to put my money somewhere else where I think there's a growth opportunity. I just burned almost a year, not quite a year, just shy of a year, maybe 9 months or whatever, holding this thing. I'm out at break even. I don't want to be involved anymore. You're going to have that crowd selling. So you're going to have lots of selling pressure, believe it or not. And you're also going to have the whole crowd that says, oh goodness, I'm long from here. I'm selling as well. I'm taking some profits. Anyone who's been long for this entire move is like, okay, finally, I've been rewarded. I've been rewarded for this move. Not that it hasn't already been up like, 50%, 100%, whatever the move and measure is from there. You're going to have a number of different sellers coming in, and you're also going to have the optimists, the people who see Bank of America upgrade, the upgrade that's, I'm sure, around the corner from almost every other analyst coverage firm, right? It's going to be buy. We're thinking that Meta can continue to rally here. They have this new plan and vision for the year of 2023. There's refocus from leadership, right? There's a bullish narrative going on here as well. You get these big moves, these big, I shouldn't say moves, but the big camps of the buy and sell side conflicting with one another. I wouldn't be surprised if this goes sideways or just sees very lackluster activity in terms of an actual trend that you develop. So whenever a gap is this large, although it looks fun, although it looks enticing, there's definitely some volatility here. My go-to is to just stay away. It doesn't make sense to try to get involved in this where there's so much uncertainty between these two groups when, we can clearly see a better setup in something like Netflix or something like Tesla, right? Or even just the NQ gap, right? I would much rather prefer to trade the NQ gap than the Meta gap. So I'll leave it off at that with the commentary on Meta. We don't really have any levels mapped out up here. And once again, I completely missed this in last night's episode of the Midweek Market Update. So, that's bad on me, so to speak. Let's see, just to give you some rough numbers, 185.36 is a pivotal number from the weekly perspective. You'll notice all these different interactions. We're opening just shy of it. If we back away from it, obviously we've got thin structure through the gap. So anything that starts to break down underneath these overnight lows at 181.56, I would watch for some gap fill. But again, you're going to get the optimists stepping in and buying. You're going to have the counterbalance from people selling. It just doesn't, to me, nah, I'm good. I'm good. All right. NVIDIA, what do we see in NVIDIA? No gap, opening inside the prior day's range. This one seems like a reasonable candidate to slow down a little bit. We know, and we talked about this in last night's episode, that we're getting some thin structure underneath us. We haven't really sustained a significant daily pullback to confirm any prior areas of support. I mean, maybe a little bit here at 192, but it's only one pullback after this 100% plus retracement. Not thrilled with new money longs in NVIDIA. You could watch for the single print breakdown in today's session. I would watch for a move underneath the overnight low to close us, those single prints at least intraday, down to what is the number 202.80. 202.80. So a pullback could develop in NVIDIA. Once again, not thrilled with new money longs up here at the highs. If it does continue to go, let it float away like a balloon, and we'll reposition on the better structure. Next up, Microsoft. Microsoft, I am willing to look for longs on because, as we pointed out in last night's video, we've firmly kind of resolved this zone here. We know that tech has experienced now, with the dollar coming in a little bit and rates going down a little bit, more bullish optimism, right? Forex currency exchange. I forget who exactly brought that up in the comments section last night, but it was a very good point, right? On the earnings reports, many of these companies cited the impact of the dollar and the exchange rate being an impact on earnings. Now that the dollar has come in a little bit, it's definitely helpful for the forward outlook. Anyways, Microsoft opening on a gap up. I would be mindful that there might be a little bit of inventory correction, but really looking for bullish outcomes here to get us up towards the top of the range at 261.75. Note that we are experiencing an inverted head and shoulders breakout, neckline measured move, easily takes us up towards that 261.75. So bullish here in Microsoft, looking for excuses to get in on a higher low pullback. Anything that kind of respects 254.25 or the pullback low from yesterday afternoon, 252 even. All right, those are the numbers there. Last but not least, the mini beast, we've got Amazon. What's going on with Amazon closing the overhead gap in the pre-market? So once again, technically, this does not close in regular trading hours. It remains open. So we have a double gap on our hands. Remember, earnings after the close today. So IV on the options will definitely be pumped up. You might want to just wait for some things to settle out. You might want to just wait until next week to trade Amazon, and we'll deal with this double gap here. We're gapping over the gap, so this truly is virtually zero structure underneath 109.70. Gap closes all the way down to 106.25. Staying above that is, of course, bullish, and your target becomes 114. I don't know that we go all the way there. Once again, just speaking in terms of extensions, if you thought about this as a bull flag, we sort of hit the target at the bottom of the gap. Right? If you stack the measured move from here on the bottom of the flag, right, we've sort of hit that measured move. So chasing new longs after a gap through a gap, I don't know. I mean, is it going to, this would be one heck of a quarterly, if you were looking at a quarterly chart, you get a quarterly abandoned baby or island reversal, whatever they call that silly pattern, right? Where you get one candlestick down here or whatever, and you just completely gap above it. Right, so you've got this structure over here, you've got this new structure over here, a quarterly abandoned baby. I mean, just incredible to think about. Incredible. I think we'll leave it off at that. It just sounds so absurd. I think it's a good note to end on. A quarterly abandoned baby. I mean, absolutely absurd. Absolutely absurd. So with that, I'm going to wrap up the stream. Thank you guys so much for tuning in. On your way out, if you don't mind hitting the thumbs up button, it's greatly appreciated. I'm seeing that we've got still 700 or so people in the chat, and only 300 likes. That's a terrible ratio. Let's see if we can juice that into the close of the stream here. So I'll let that simmer out. I'll remind you one last time that the Discord is linked down below in the description. It's completely free to join. We send some updated thoughts throughout the course of the day there in the chat, so you can come hang out with us and chat with other great traders as well. And with that said, everybody, I wish you all a green trading day, and I will see you in the next one. Remember, tomorrow morning we're live at 8:15 to catch the ADP non-farm payroll report. Have a good day, everybody. Stay green.